Hello friends, hello professionals, and welcome to my channel, The Sea of Regulation. Simone here, and I am here with a video today that is a bit hype, future focused. It's looking at some issues that I think we need to get past in a lot of corners of the world, especially where I'm based, which is in the Caribbean. What is it? It's going to be touching on payment systems and decentralized finance, or DeFi. And I'm pretty excited about this topic. But before I dive into this content, let me get my usual disclaimers out of the way. I am a financial services regulator. I am not a lawyer, and I am not a financial advisor. And the views on this channel are definitely all my own and do not represent the views of any regulatory authority or international standard setting body. Now with that out of the way, let's dive in. Payment systems and decentralized finance. I could have two separate videos, but we're going to keep this short and I'm going to have this under the basics. And if you want an expanded video on both topics, drop it in the comments below because I definitely have a lot to say in relation to these things. Now, payment systems. In the Caribbean, one of the things that really gets to me, it grinds my gears, is that we pay more for payment systems than basically the rest of the world. There's so many solutions that are being offered right now in relation to cross-border remittances and just faster payments with crypto and other digital assets that it pains me to know that we still pay ridiculously high fees as it relates to wire transfers or for your Western Union or your MoneyGram, so your money remitters. And why is this important, especially in the Caribbean? Well, you see, certain persons will rely on those remittances to basically live, buy their groceries, pay their rents. Their family members have traveled abroad, are trying to earn some money, and it gets extreme. They might be in the construction industry in a particular country with big trucks rolling by, and they're working tirelessly to provide that money. And guess what? Before that money can even get to the jurisdiction, somebody's taking a big heaping cut. Now, as a financial services regulator, you might be wondering, well, what are you doing about it? And that would be a good question. Now, one of the things that I think regulators need to do more on, especially in this region, is address their mind to market conduct. You see, regulators can influence and impact or even restrict the amount of fees that are being placed on consumers because it would fall under the conduct provisions such as predatory practices. And then we can get into predatory practices and fees and all of that in maybe the separate video. But it's really important to address all minds to making sure that there's less friction when it comes to payments. You paying 7 to 10% on the money that goes back home or that you send to your loved ones makes a real difference. That $50, $60, or even $70 that is attached to, say, a wire transfer, and I can speak to that for myself, can mean the difference for some people between a week's worth of groceries or going without. And so you use the money remitters to actually transfer the money. But guess what? You're paying 7 to 10%. So even if you've scrounged and saved and worked that overtime and you're sending $300, $21 might not seem like a lot, but it kind of is. $21 can go a long way for a family in certain countries where the average wage might be $1 a week, $5 a week. And these are incomes that are before taxes. Now, decentralized finance, why am I excited about it? Because traditional financial services, I think, has gotten pretty happy in the Caribbean. You see, they provide a lot of services with a lot of fees and a lot of restrictions, and they take little to no risk. And one of the areas that I'm talking about, you could look at insurance. Now, there was an experiment done. I want to say experiment, but I think they were beta testing this. They were beta testing automatic insurance claims, for certain events. And they were seeing whether you could use decentralized finance or smart contracts for certain facilities in certain countries. Now, smart contracts I can get into a separate video. Let me know if you want to see that in the comments. I have a lot of views on a lot of tech things. But decentralized finance for microloans, it is coded in terms of me getting a loan at a particular percentage. It is for a particular amount, particular time, particular payback, and it is amongst a whole network of people, persons, individuals, companies, providing that capital for somebody to get a loan. And then that loan is repaid, and over time, of course, at the interest rate, the people who have invested in the decentralized system would get a payout out of it. And why is a decentralized loan important? Well, if banks are not going to be in a position of modernizing their credit facilities, I think that competition will help encourage them to modernize those same facilities. You see, DeFi can go beyond loans, but loans are an easy example because most persons would be familiar with having a loan themselves or someone who has had a loan or might be looking at getting a loan for themselves. So why would I trust somebody that I don't know, some company that I don't know, or some decentralized system that I don't know for a loan? Well, you could get lower interest rates. You could get competitive bargains. People will be assessing your risk. And in terms of microloans, it would eliminate some of the things that happen in the Caribbean that, again, smack of predatory practices, loan sharks. I know that in most Caribbean countries, there are different names for loan sharks, and loan sharks can charge sometimes up to 30% interest on the money they lend you, or it could be a reduction in the payday loan provisions. So today is Tuesday and you don't get paid until Friday, but you have bills that are due on Wednesday. You go for a payday loan, and guess what? They're taking hefty fees out of your money. What if you could get a microloan and instead of paying back the people 30% or 10% or 15%, you just pay back 2% because it's a very short-term loan? That saves you money, right? Now, I'm not going to dive too deeply into this because, like I said, I'm going to put this one under the basics because it's dealing with two issues and I might be a little too excited and a little too hyped, but I want to make sure that you understand the general concepts of both why we need better payment systems and why DeFi might actually be a fabulous solution in the Caribbean. So much so that I wrote a blog on it. I'll link that in the description below as well. But guys, if you found this interesting, if you want to hear more, do the YouTube thing and definitely hit the like button. If you haven't, subscribe. I'm coming back with a lot of varied content because regulation hits a lot of places that you might not necessarily think, and the forward-looking regulators are looking at those innovative spaces as they should be. If your regulator isn't, you should probably say something to them. Ask them a question. Not saying to put them on the spot. Yeah, put them on the spot. Because this is the world we live in and it's moving really fast. So what else do you need to do? You definitely need to subscribe if you haven't. And for all of the people who have subscribed, a huge thank you. Hit the notification bell so you get notified when I drop another video. And I'm going to wrap it up here, and I'll definitely be looking forward to the next video, and I'll see you on the next one.